Yes, there definitely has been an economic slowdown due to the spread of COVID-19 and thus the government taking precautions to stop that spread. Or as I like to call this time, the Rona recession, because I'm a scholar, and it also has some very serious implications for the real estate market and the housing industry as a whole. Let's take a look at all this stuff right now. First item on the docket is the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act that was put into place by the government to help those that have indeed hit upon emergency situations and they can no longer pay their bills. One of them being, obviously, a mortgage. So if you can't pay your mortgage, can you request forbearance? And what does forbearance even mean? Let's take a look actually what the CARES Act says, and then we can go from there. So looking at the first portion in regards to mortgage forbearance, you need to make sure that it is a federally backed mortgage loan, which means that one of the institutions of either Fannie Mae, Freddie Mac, or Ginnie Mae are the ones that own your mortgage. And then from there, you need to make sure that you're the one reaching out to your mortgage servicer, so probably your bank or whoever you're writing your check to every month to pay your mortgage, and inform them that you are indeed directly or indirectly experiencing a financial hardship due to the COVID-19 pandemic. Which brings us to the second portion of duration of forbearance. So typically a forbearance period is going to be just like how many days you pay your mortgage, every 30 days or so. And you will go all the way up to 180 days if you actually need it on that first request, which is 6 months. And then from there, you can request again another 6 months for mortgage forbearance if you absolutely need it, bringing it all the way up to 1 year. During this period, so going to section 3, you are not to be charged any additional interest or fees or penalties, and you can't be reported to any credit agencies that you're behind on your loan because it's not considered being behind. You just have it in forbearance. So this all looks fine and dandy, but there could be some drawbacks. Well, let's just look at that word forbearance. That's definitely not forgiveness, nor is it deferral. It quite literally means that there's only a delay in legal action that can be taken against a debt during a certain period of time. So even if you are hitting upon hard times during the COVID-19, forbearance may make things even worse at the end of it. So looking at that 6-month period, forbearance doesn't mean that your principal, interest, tax, and insurance just stops. It means it keeps accruing, and then at the end of that 6-month period, you would still have to pay a full lump sum, which could put you in a worse situation than you are right now. So looking at other options, you may want to pursue a loan modification, which would adjust the entire terms of your loan and maybe give you a more preferable monthly payment that's manageable and what can be made right now. The other option is also deferral. If you can, talk to your mortgage servicer about putting a deferral on your payments toward the back end of your loan. The only thing with this is that, yes, it would make sure that everyone gets paid, but it could have negative credit implications further down the road. And again, that's what we're looking at with all of these options, is that everyone's in a tough situation. There's liquidity issues with mortgage servicers, but there's also issues, obviously, with the borrowers being able to pay. So, thinking about it wisely, it's best to try to make your payments as you can on time, or try to work out other options where you're not necessarily putting it off, but you're just working out a better deal at this time. And although these options don't necessarily look preferable, they are at least available. And that's probably why the CARES Act is written so vaguely in regards to what exactly to do with a mortgage during this time. Because it really does take a mortgage servicer and a mortgage borrower on a case-by-case basis, looking at the loan, looking at the situation, and figuring out what's best for both of them. Because we have to remember, the mortgage servicers didn't necessarily put themselves in this situation. This has been thrust upon them. So while they're floating the bill for a lot of these, there's definitely going to be some liquidity issues, and there's going to be reason for them to continue to want to receive payment on time. Sidebar, there's definitely verbiage and information in the CARES Act in regards to how to handle rental situations. If you're a renter, make sure that you reach out to your landlord in writing and express to them that you have indeed hit upon hard times due to COVID-19, and you either need a rent reduction for this time or an installment agreement to be made so they can amend your lease and ensure that they will be paid some way, somehow. It's just a matter of getting out of this situation that we're currently in. And then also, if you're a landlord, do not forget that the goodwill that you produce for your tenants during this time will go a long way in terms of retaining them for a longer period of time, and also ensuring that folks are going to be more quality, because they'll likely take more responsibility in the premises and also around the grounds because you have been good to them through this tough time. It is evident that the CARES Act does do good to help people get themselves into a better situation during this time while they need to stay within quarantine and on lockdown. But what does this mean for folks that want to actually transact in real estate with either the purchase or the sale of their home? So that brings us to number 2. What is the real estate landscape? Well, it's likely that the purchase volume of homes is going to dramatically decline well into the spring, and if it continues throughout the year, we will likely see a 15% decline in overall home sales, as evidenced by this real-time data on in-person home tours being scheduled currently in California versus the volume that we saw in 2019. With social distancing becoming the new norm, so too are 3D virtual tours of homes. 3D tours allow prospective buyers to virtually experience the spatial aspects of a property much better than still photos or even video can. Although nothing will ever be the authentic experience of an in-person viewing of a home, it's still important that serious buyers utilize this technology on listings that they view online so they can get the confidence to put in an offer on a home that they love. Contingent upon an in-person viewing of the home, that way they can at least take it off the market while sellers are still somewhat anxious about what's going to happen in this market. And I can hear my wife right now saying to me,
"That's great, Sterling, but with everything going on, is it a good time to buy? Also, can you mow the lawn?"
And in short, the answer is it depends. As always, it really does depend on your own personal circumstances, such as, do you really need the housing at this moment? Is your job secure enough to get through this time? And also, do you already have the savings and the cash reserves to get through not only this time, but also any other storms that may come ahead? And in terms of doing the lawn, well, that's really just going to depend on if you have a nice cold crispy boy waiting for me at the end. So in general, the real estate buying landscape has the following terrain. Number 1 being that you're going to have relatively low interest rates still. You're going to have higher loan qualifications, and that's partly due to the quarantine/lockdown taking people out of the offices. You also have forbearance claims coming in that need to be processed. There's also a huge refinance boom that took place back in February where interest rates were at record lows. And then also just in general, the manpower to take care of all of that, considering that it's also out of the office, there's only one way to make sure that there's enough of a bottleneck so they can get through all of it, and that's obviously creating higher loan qualifications. You also have less competition during this time, so there's fewer buyers out there at this moment. And then there's also more flexible sellers, people that are just obviously, they have their home still on the market, they have some type of need to get rid of that home at this moment, so they will be more flexible on the negotiation side. And then you can also see from this National Association of Realtors graphic that 56% of sellers have removed their listings, so there's going to be less inventory for you to look at. That perfectly segues us into selling and whether or not it's a good time to sell at this moment. And again, that's all down to your own personal circumstances and whether or not you have the motivation, number 1, to sell and the need, if you have the job security or maybe the lack thereof at the moment, and also if you have the savings in place. Ultimately, this comes down, do you have the need for the cash at this time? So if you have that need, then the real estate selling landscape has the following terrain. You're going to see less competition. As we saw in that previous graphic, 56% of sellers have removed their listings. You're going to have a very cash heavy and highly qualified buyer pool, albeit it's going to be a smaller buyer pool given that there's fewer of them out there. If we look at this NAR graphic, there's 59% of buyers that have actually dropped out of the market at this moment. They're just taking a break, obviously because other things are taking precedence. And then also you can expect a longer transaction and escrow period just due to certain places being shut down, such as government centers. You also have escrow offices that may not be as heavily staffed. So transactions are likely going to be 60 days or so in terms of the escrow period, but that could work in everyone's benefit. All of this shows that it's less preferred to buy or sell during this time on a whole, but there's definitely some desirable elements in there for those that really need to do so at this time. And this brings us to our third item on the docket, which is the $1 million question, or I should say $1 trillion question that everyone is asking, is the housing market going to crash like it did in the Great Recession in between the years of 2006 and 2008? So in between 2005 and 2007, total home equity cashed out of residential homes was all the way up to $824 billion worth, versus now, where the crisis of COVID-19 in between the years of 2017 and 2019 leading up, we're only at $232 billion worth of equity being cashed out. Essentially, homes were used as ATM machines in the years leading up to the Great Recession, versus now leading up to this economic slowdown. People have used their homes as the proper safe haven for their investment, as they should be. Furthermore, we can look to Director Mark Calabria of the Federal Housing Finance Agency, who has stated that less than 1% of Fannie Mae and Freddie Mac's book of loans is underwater at this current time, which is outstanding. It's an excellent position to be in and doesn't indicate too much of a landslide like we saw before. The housing market doesn't have the negative equity position it had before, nor the same volatility and price appreciation. We can see over the last 6 years, we've had very stable price appreciation versus the 6 years leading up to the Great Recession, where we had it fluctuating almost erroneously over the years. It has to be said that within a time like this, having a place to call and be home at has never been more valuable. Obviously, people are staying at home to ensure that we flatten the curve and stay safe from COVID-19, but it's also where people are experiencing home in totally different ways. We're now probably realizing that some of us don't need as big of a home, so we need to downsize. And then there's also some of us that are probably going nuts because our kids are driving us off the wall and we realize that we need a bigger house and we need to upsize. So within all that, there's going to be pent up demand because people's lifestyle needs have changed and they're essentially realizing that they need a new fit, just like you and I probably realize every couple of days that we need to change our sweatpants.
You shall not pass!
Now that we have the context, it's evident that yes, we are in a recession and the market does not have the same healthy activity, pun intended, that it had earlier in February of this year. Having said that, no, a housing crash doesn't appear likely due to the many safeguards coming into play prior to foreclosure becoming the only option for people. Fannie Mae and Freddie Mac are currently at about 7% of their total portfolio of loans having forbearance requests, which is an outstanding number, all things considered. If that percentage skyrockets to above 30% without the mortgage servicers having a government-sponsored advancement facility in place to help them bear the costs of all these forbearance claims, if it even gets to 30% without having that mechanism, then yes, we would be in a very dire situation and we would probably see something similar to the Great Recession, or at least where half of the mortgage finance sector is wiped out. Now, having said that, basically, I'm giving you it's not necessarily a possibility, but it could be. I'm sorry I can't give you a more straight answer on that. It's just all up to us to kind of suss out the situation and go from there. But really, we are totally in a different situation with the fundamentals of where the real estate and housing market sits than we were the last go around. We look no further than National Association economist Dr. Yoon for a little bit more insight on where we're going to go.
Not only, did we try to look at every factors, but we also looked at past disasters events. Now, current pandemic is so new, nothing is comparable. But when I looked at New Orleans after the Hurricane Katrina, when unemployment rate shot up from 5% to 15% within days, but with a massive disaster relief funding going into the city, the unemployment rate quickly went down once the city began to reopen. So the unemployment rate came down to 5% pre-disaster levels. And home prices actually rose throughout. Now, one may say there was some home demolition, housing shortage, but for the current nationwide housing situation, we had a housing shortage before the pandemic, and we have even acute shortage today because of not enough listings. Another example is after the tragic events of 9/11, home prices in the New York City area actually increased in 2001 and 2002 and 2003. So there's nothing to suggest just because we are hit with this pause button that automatically things will come apart.
Well, I truly hope that the information and insights within this video or anything else that I've put out that you've looked at, I pray that they've at least helped you accomplish your real estate goals, either now or in the future, and also that they've been accomplished wisely. In these times, it's definitely, it's uncertain. There's no crystal ball for where we're going to go, and things are changing on the daily, but we can just take the information that we have at that time and proceed as wisely as possible. But we can also rally around each other. So, if you have any questions or any thoughts on anything that was in this or just in general, if you want to call me cotton-headed nitty-muggins for some reason or whatever, if you're an Elf fan, I don't know, but you can comment that below and we can start a dialogue from there. And then other than that, I've also put some helpful resources down below. So you can see the CARES Act in its entirety. That's linked below. And then we also have the Fannie Mae, Freddie Mac, and Ginnie Mae links to where you can actually put in your information and see if they actually own your loan. And then from there, you can proceed with the forbearance process properly. So just a few things to help you out. And I'll put some other fun links down there to give you some more help and more resources to put in your toolkit. But with that said, I just want to leave you with the wise words of the U.S. Secretary of Housing and Urban Development, Dr. Ben Carson, and I'll catch you in the next video. And again, thank you for watching.
The words are already there.
Mm-hmm.
They're in our Pledge of Allegiance. One nation under God. It's in our national anthem at the end of that first stanza, where it says, the land of the free and the home of the brave. You can't be free unless you're brave. It's on every coin in our pocket and every bill in our wallet. It says, in God we trust. And what we need to do is recognize it doesn't matter what your faith is. Godly principles of loving your fellow man, caring about your neighbor, developing your God-given talents to the utmost so that you become valuable to the people around you, having values and principles that govern your life. That's who we are. And if we do that, there is no issue that can conquer us as a people.